Support lines are like the last defenders on a battlefield, and right now, Shiba Inu is clinging to one of its most important zones. Analysts are circling the chart, long-term holders are watching quietly, and 2026 is getting closer with every candle. But what does holding this deep support really mean for Shiba Inu's next big move? Tonight, we unpack the strategy behind the levels for long-term believers everywhere tonight. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. Through October, Shiba Inu managed to close the month above a key area that many traders treat as long-term support, recovering from a mid-month dip without setting fresh lows. Price briefly slid toward the mid-900 unit region before bouncing and finishing closer to 1,020 units, a signal that buyers were still prepared to defend deeper territory rather than abandon the chart completely. That late October resilience came during a period of flat volume and narrowing volatility bands, conditions that often come before bigger swings. Historically, November has been one of Shiba Inu's stronger months, with previous years showing large upside moves once a firm base was established and sentiment flipped. Recent data for this November shows the token ranging between the high 700 and low 900 units, with market cap in the mid-4 to low $5 billion area and repeated bounces after dips instead of sustained collapses. Together, these details build a backdrop where 2025 looks like a grinding year of lower highs, but also one where a structural floor has not yet given way. That is why the current hold-the-line moment carries so much weight for anyone thinking seriously about 2026. Right now, multiple analysts describe Shiba Inu as trading inside a clear support and resistance corridor. On key short-term timeframes, support clusters around 7 to 150 units, while resistance sits up near 8 to 160 units, forming a tight compression zone under heavier moving averages. If price pushes beyond roughly 8 to 190 units, some models see room for a move into the 9 to 120 unit region. But a clean break under 7 to 150 units could expose the low 700 band. Other timeframes map a wider structure with support in the low 1100 units and resistance closer to the high 1200s, reinforcing that Shiba Inu is still locked inside a larger range rather than trending smoothly. Earlier in November, the token even slipped below the psychological 1 to 1000 unit line, confirming another leg of the broader downtrend. Yet instead of spiraling much lower, it stabilized near where it trades today. At the moment, Shiba Inu changes hands around the mid-800 units, with market cap near $5 billion and daily volume in the mid-hundreds of millions of dollars. Over the last month, price performance has been negative, reflecting the drag of the broader correction, but the most recent sessions have shown a modest bounce as traders respond to forecasts built around this long-term floor. Sentiment metrics remain in the fear zone, yet some models still anticipate the possibility of a strong rebound from these levels if conditions improve. Several fresh forecasts frame a scenario where Shiba Inu could climb toward the high teen hundreds by December, assuming that a crucial support region near 7 to 150 units remains intact. In this view, that floor is more than just a line on a chart. It is a decision point for 2026. Lose it, and expectations reset lower. Hold it, and the token can still approach the new year from a position of relative strength instead of damage control. Technically, Shiba Inu remains below many of its heavier moving averages, which continue to lean downward and act as dynamic resistance. The token sits above a short 10-period exponential average, yet remains under the 20, 50, 1 to 100, and 2 to 100 period lines, confirming the weight of the longer-term downtrend even as shorter metrics stabilize. Forecasts for the coming days generally hover around the mid-800 units, which matches the current reality of squeezed price action near the floor. On the tokenomic side, burn campaigns have accelerated. Early November saw more than 1 million tokens destroyed within a single day, with weekly burns climbing sharply to above 61 million tokens. In isolation, those figures are small compared to the enormous total supply, but they still contribute to a slow deflationary effect, especially when combined with favorable seasonal tendencies later in the year. Key resistance levels above price remain mapped in the low 1100s and mid 1200s, providing a ladder of potential upside targets if this support zone really does underpin a larger bounce. On-chain studies add another layer by noting that a large chunk of tokens moved from exchanges to cold storage in late October, amounting to hundreds of billions of units. That kind of shift usually signals that bigger holders view the current range as a long-term entry rather than an exit. It is exactly the kind of quiet accumulation that often appears near durable support. When analysts step back to think about 2026, they tend to anchor their views on this same region. Some long-term prediction pieces highlight the 8 to 100 unit area as a deep floor that has historically absorbed heavy selling. Others project that November's range, stretching roughly from 7 to 100 to 2 to 1,000 units, could give way to a higher band next year if risk appetite improves and Shiba Inu continues expanding its ecosystem. Model tables for 2026 leave ample room for both bullish and bearish outcomes, with maximum targets reaching towards several thousand units and minimums that revisit much cheaper territory. These spreads underline the reality that support holds our permission, not promises. As long as Shiba Inu continues to respect its current floor, a 2026 strategy built around gradual accumulation, ecosystem growth, and opportunistic rallies remains on the table. If that floor breaks decisively, every bullish roadmap must be redrawn. While price battles the support zone, builders are busy on infrastructure. The Shibarium team has spent November rolling out a critical security update, migrating public endpoints to more robust configurations to eliminate single points of failure. At the same time, the network is closing in on a 14 million block milestone, having added millions of blocks over the last half year despite a lull in daily transactions. Recent reports also tied an 11% intraday Shiba Inu price surge to optimism around this steady Layer 2 progress and a slightly friendlier macro backdrop. Burn campaigns keep humming in the background, and community members continue coordinating efforts to chip away at supply. For long-term supporters, these updates matter as much as the candles. They suggest that even while the chart looks heavy, the foundation is improving beneath the surface, which is exactly what you want to see when price is sitting on critical support. Looking ahead over the next week to month, the key questions are straightforward. Does Shiba Inu continue to defend the 7 to 100 to 8 to 100 unit region? Do daily closes stay above the deepest part of the floor? Do short-term rallies manage to push toward 9 to 120 units or beyond without being crushed instantly? If the answer to these questions is yes, the near-term forecast becomes more constructive. Over the next 3 months to 3 years, the focus gradually shifts. Longer-term outlooks imagine a world where Shiba Inu trades in a higher baseline band than it occupies today if adoption, token burns, and risk appetite cooperate. Forecast tables for 2026 and beyond show rising potential ranges as the decade progresses, but also warn that the path will likely be uneven, marked by sharp pullbacks and stretches of boredom as well as dramatic breakouts. At the same time, competition is intensifying. New meme projects are aggressively marketed as the next big thing, with pre-sales promising enormous upside and pushing narratives that older names like Shiba Inu may now deliver only modest multiples. Some articles argue that focusing on fresh tokens could offer better risk-reward profiles for those chasing extreme gains, using examples like Little Pepe or Alpha Pepe to illustrate how fast capital can rotate. For Shiba Inu, that means the opportunity cost of holding into 2026 is part of the risk. Investors need to ask themselves how much they believe in the ecosystem's ability to keep evolving, how much value they place on Shibarium and burns, and how comfortable they are watching new narratives come and go without chasing each one. Support is where conviction is tested, and right now, Shiba Inu is proving it still has a floor that refuses to disappear. But support alone never guarantees success. What happens between now and 2026 will depend on how smartly investors use this base, how well builders keep shipping, and how disciplined traders stay when emotions swing hardest. Watch the levels, not the noise, and move carefully as cycles inevitably shift. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.